Good morning, everyone. Welcome to another RF Crypto video. As everyone probably knows, the markets are down by almost 10%. Sometime last week, the global crypto market cap was standing at 2 trillion. It has gone down to 1.58 trillion as of today. The markets in the last week or so have shed over $500 billion. Bitcoin is down by 8.5%. As always, Ethereum overreacted and is down by 12%. So whenever the crypto market goes down, Ethereum overreacts, and whenever crypto market goes up, Ethereum overreacts as well. So at the moment, the crypto markets are down by 9 and almost 10%. Ethereum is down by 12, a little bit higher than this 10% decrease. BNB is down by 11%, XRP is down by 12%. Solana is hitting lower levels than it's seen in maybe a year or so. Everything is down. Your meme coin, Dogecoin, down by 15%. You can scroll all the way down and all you'll see is red, except obviously for your stable coins. People are moving their money away from crypto into safer haven. Looking from the top rated coin, which is Bitcoin, to the 100 rated coin, which is Qtum, everything's red. And the main reason for this is that Russia has launched a full-scale invasion of Ukraine. They named it a special military operation in the Donbas region, which he says is to protect the people from an authoritarian regime. Obviously, we all know that's sort of an excuse for an invasion, and it's all politics, it's all power plays, and it's all Russia protecting its own interests. Obviously, no one condones this kind of action, and more importantly, this shakes the foundation of peace that we've had in the 21st century. And when I say peace, we mean global peace. From 1914 to 1945, we had World War I's and World War II's, which saw a period of turmoil. From 1945 to about 1990, we saw a Cold War between the United States and the Soviet Union. But from 1990 until more recently, we haven't had much conflict, or we haven't had a situation where World War III was possible. It's a 30-year time frame where there was a relative global peace. And now I think this is falling apart, and the possibility of further escalation is higher. Hopefully nothing happens because we're dealing with nuclear powers. Getting off the tangent I went on, the price of Bitcoin and the price of the crypto market in general dropped as a result of this military invasion. And this is now because the geopolitical risk is extremely high. People have become extremely fearful. And when this happens, and when there's conflict globally, people tend to shy away from riskier assets, which are crypto and high-tech stocks, which we'll see in their respective charts in the next few minutes. And they tend to move to safer assets such as gold and bonds. And we will look at how the price of gold reacted to this invasion of Ukraine by Russia. So when Russia announced its special operations in Ukraine, the price of Bitcoin dropped from 39,000 all the way down to the new support level that we're seeing now at 35,000. Immediately this got bought up, and the price didn't rise up so much because there is still a lot of selling going on in the markets. There is still a lot of fear in the market, so the selling is still going on. And after these 4 massive red candles, we saw 2 small green candles. And these are opportunistic scenarios where people are trying to buy this dip. And if further escalation continues, I don't see this going up. I see it breaking the $35,000 support level and going all the way down to maybe a new support level of 32,000. But that's something for us to watch in the next few days as this conflict evolves. And tying into the price of Bitcoin, and also what's very surprising is not a lot of leverage was flushed out of the market. It still continues to be close to the all-time highs. And I think what this entails is that a lot of the positions in the market were short, and they were expecting the price of Bitcoin to go down. And when it went down, only a small percentage of these leverage positions got liquidated because these were the long positions. And I think people are holding on to their short positions to make further profits, as they probably expect this conflict to escalate further. So it is quite surprising that most of the positions were short when the data was telling us otherwise. I think that the data said that it was 50-50, but we can now see from the leverage charts that wasn't the case. We have a situation where maybe by a small percentage, the shorts were a bit higher than the longs. Looking at the Nasdaq, it fell by almost 3%. I have reiterated the fact that the crypto market follows Nasdaq. Wherever the Nasdaq moves, the crypto market also follows. And the Nasdaq is a composite of the top 100 tech stocks in the United States. And tech stocks are still considered to be of higher risk. So whenever there's conflict or whenever there's fear or whenever there's a disruption to the world order, people tend to sell their tech stocks and move into safer, bluer chip stocks or into gold or bonds, which are safer assets. And this is exactly what happened. When it was announced that a military invasion or a special operation was going to take place, the price plunged by 2.5% or 2.6%. This just shows that both crypto and tech stocks are high risk. However, crypto is high risk because the Nasdaq fell by 2.6%, almost 3%, but cryptocurrencies fell by 10%. If we look at gold, traditionally for hundreds of years or even for thousands of years, it has been considered a safe asset, a store of value, and a haven for when there's conflict globally in order for you to retain the value of your assets. And these green candles just reiterated the fact that gold is still a king of the store of value. People flocked out of crypto, people flocked out of the stock exchange, specifically high-tech stocks, and they put their money into safer assets like bonds and gold. And because it drove up the demand for gold, we see this increase in price. The price increased by more than 2%, and gold is reaching levels that we last saw in January 2021. And this is when the pandemic hit. So a disruption to the world order, a lot of fear in the markets led to a flushing out of the stock exchange and a flushing in of money into the gold market. And this caused this massive spike in gold price. And we can see the same thing here. When the conflict started, or when there was a hint that Russia might invade, the price of gold started to go up. People started to put more of their money or more of their capital into gold in order to be safe, in order to protect the value of their assets. And this makes sense because the future is unknown and the future is uncertain now, because anything can happen with this special military operation. Finally, I want to talk about the price of oil. The price of oil had reached $99 since Russia announced its special operation. It went all the way up from $90 to $99, which is a almost 10% increase. And why did this happen? This happened basically because Russia is the third largest producer of oil in the world. And obviously, such a critical situation is going to be felt in the global markets. And the prices dropped because companies and investors are flocking to buy oil. The demand is increasing. And this is simply because people think that the supply of oil globally, especially from Russia, the third largest producer, will be disrupted. People think that there will be a shortage of oil in the world because of the conflict. This is mainly because of the crisis, and secondly, the sanctions. The United States and Europe want to impose heavy sanctions on Russia. If these include oil and gas, there will be a massive disruption in the supply chain of oil. The United States and Europe import oil from Russia. And because there is a uncertainty on whether the supply of oil will be disrupted, these companies and these investors, they want to get ahead of the curve, they want to be safe, they want to stockpile oil just in case there is a disruption of supply of oil. So now they're rushing into the market to buy oil, and this is driving the prices very, very high to levels we last saw in 2014. So it's interesting to see how stocks and how commodities react differently in times of crisis. Stocks tend to go down while commodities tend to go up. Gold is a store of value. People will invest in gold in uncertain times. Russia is the third largest producer of oil. There's uncertainty on whether this supply of oil will be disrupted. People are getting ahead of themselves, purchasing oil in order to stockpile just in case there's a shortage of oil in the markets, driving the prices high. People are disinvesting from crypto and stocks because they're considered to be high risk. They want to be safe in a fearful time, and hence money shifts from the latter to the former. And with that, we come to the end of today's video. Thank you very much for watching. If you like the video, please leave a like. Please hit the subscribe button, share this video with your family and friends, and I'll see you for the next one. Invest wisely, and cheers.